Hey, Andrew, just making sure your voice is still there.
Yep, I'm here.
Excellent. Okay, we can hear you loud and clear. So, thank you for your agreeing to present today. The session, as I say, should go for about 45 minutes. We look forward to having an overview of the risk research solution.
Great, thank you very much, and morning, everyone. I know you're on mute, but I assume you're all saying good morning back. Right, what I want to do today, if we just have a quick look at the agenda, is give you a quick overview of who IRESS is. Many of you would have heard of Xplan, which is a product suite that we offer, but many of you may not be able to tie that back to IRESS or identify with who we are as a company. And then we're going to go into a bit of the risk research, discuss who's using it, how it's being used, and then at a granular level, I guess, probably more of the design philosophy and scoring methodology, so you can understand from a research perspective how we rate products, how we address issues like contractual certainty in insurance products, to give you a better understanding of how the tool is engineered. We'll touch on a few advisor tools. But then, as David and Barry both know, my passion is really in advice, and this is a tool for advice. So I want to move into a few examples of how research is actually being used and show you how you can use that in your practice rather than just as a standalone tool or resource. So if we go into IRESS as a company, we are a principal supplier of share market, financial market and wealth management systems. We're a global company. We've got offices in New Zealand, Australia, Asia, Canada, South Africa and the UK. 20 of those global offices. We've got just over 1,300 staff with a market capitalisation of just under $2 billion at the moment. We are the largest financial markets and wealth management vendor in New Zealand, so we absolutely are fully committed to New Zealand. We do have scale, we do have a huge investment in our product suite here in New Zealand. And quite importantly, we are truly independent, so we're not institutionally owned, and that's pretty important for a technology company of our scale. Typically there is some sort of institutional ownership. Our biggest shareholder is actually the ASX itself. So in the wealth management space, as I said, we have a product suite called Xplan. And what I'm talking about today in the risk researcher space is one of 14 integrated modules that we make available within Xplan. So you'll see when we go through it and I start talking about how to use an advice, you can understand, I guess, how it fits into the bigger picture of what you guys are doing with your clients. So risk research, who's using it and how? Well, no secret that there's a higher utilization in regulated markets. So we've seen a huge uptake in our risk researcher tools in South Africa and Australia over the last few years as the regulators start to put more and more pressure on advice and advisors are being tasked with more complex requirements around proving their advice modules. To get some numbers to that, I looked at the Investment Trend Survey. This is a company in Australia that surveys just over 1,000 advisors every year across a broad range of questions in terms of technology and systems that they're using. Now, this one is a few years old, but what it tells us in Australia is that 84% of the Australian planners are using risk research. So that in itself is quite a high statistic, but the statistic that really jumps out for me is more than half of them use it for almost all of their insurance recommendations. So if we just think about that stat for a moment, what that's saying to us is there's a high proportion of planners who are using research of some description, but rather than having it as a standalone tool where they print off a research paper and then take that to various client meetings, they are actually using the tool in each of the independent engagements that they have with clients, and that's very important. So what that's telling us is that risk research is no longer a standalone static tool. It is integrated and embedded in the advice process and is becoming extremely client-centric. So what is our design philosophy? Well, we have 5 key design philosophies. The first one is that research is designed to assist and support you guys in making your recommendations. It is not there to make a recommendation for you. Secondly, the research that we provide cannot replace the experience and expertise of risk advisors. Research tools cannot give any consideration to the personal relationships that you have with underwriters or claims teams. Our research has to be transparent and open to debate by both product manufacturers, insurers, advisors, and consumers. And lastly, it must adhere to the highest levels of quality assurance to give both yourselves and your clients confidence in the integrity and the methodology of our research. So those are the 5 key design philosophies that underpin our Risk Researcher product. Now, if we have a look at the first 3, they really highlight the fact that risk research should never be used as a sole basis for a recommendation. I am always asked a question by advisors, who has the best trauma product in New Zealand? And quite simply, the answer is there isn't one. Because we as an insurance research house know everything about the policy wordings, we know everything about the products, we know nothing about your clients. So we believe that product research is one element in a holistic view of what insurance advice comprises. So in there you've got the client circumstances and needs. As I said, we don't have any idea about what those are. You've got product structures, the types of benefits you want to include. You've got underwriting services, financial strengths. All of these elements come together to form advice. On a personal note, I know that my current life insurance, the product is mid-table. It's not the best product in New Zealand, but my broker and I have been friends for a long, long time, and I know that if something happened to me, he would be able to look after my family and make the right decisions for them without me being here. I bought into that. He told me that the company he recommended didn't have the best product, but he's been working with them for years. He trusts their underwriting service, and he believes that their claims are fair and equitable, and that is why he recommended I go with them. Now, that was great advice for me, and I bought into that. So it's far more than just who has got the best score from a product research house. The last 2 principles are designed to minimize errors and subjectivity. Now, I've highlighted those words because errors and subjectivity are incredibly important when it comes to research. We need to give advisors a high degree of confidence in the information that you're using in support of your recommendations. So where do you start getting errors or subjectivity creeping into risk research? Well, firstly, it's important that you get the methodology right. The methodology needs to be open for independent review or an audit. You need to understand who the researchers are. Are they truly independent? Do they have any affiliations to any of the companies that you're researching? Did they perhaps used to work for a company that you still research? Did they have brokering agreements where they're receiving commissions from one or the other? Could there be any bias that creeps into the research? And if there is, that needs to be understood very, very clearly. So the question you should be asking yourselves if you're going to be using a research tool is who researches the researchers? Now, there aren't huge barriers to entry to this market. Anyone can go be a risk researcher. In fact, a lot of the brokers that I talk to do their own research. So the question is, if anyone can go be a researcher and sell their ideas, how can you make an informed decision about the best way to go? So from our perspective, very early on, probably 15 years ago, we decided that if we were going to be in this space, we needed to adhere to a quality assurance accreditation. And we have an ISO 9001 rating for our risk research. We're the only company in the Southern Hemisphere who has that. What this means is that our methodology and our rating framework are audited externally by a third party, and we have to subscribe to regular audits. So every 6 months, they will come in and they'll look at our methodology, they'll look at our rating framework, and they'll look at our staff, they'll look at all the processes that we follow in our risk research module to ensure that it is truly independent and it is designed to minimize errors and subjectivity. The word independent, as I said, I touched on a few areas that you as users of the research should be asking yourself when using a research house. We are fiercely independent. Now, that doesn't just mean that IRESS is an independent company. It means that our risk research team is actually separated entirely from senior management and executives and enabled to ensure that they are free from bias. No management teams have any influence over the analysis provided by the research services team. So that is something that is part of our ISO framework. So how do we assess the insurance products that we analyze? Well, part of our methodology is that we award higher ratings to provisions that provide a greater level of assurity to policyholders, or they provide a higher probability of a claim being admitted. So this is our idea of contractual certainty. Is there a benefit that would give a client a greater opportunity to have a claim for that specific coverage. Then we employ an A, B, or C rating. An A being the most generous definition, and an C being the most restrictive. So if we talk about things like heart attack provisions, if there was a company that came to market tomorrow with a trauma product that said if you got chest pains, we'll pay 100% of your claim, clearly that would be a market leader in terms of the probability of a claim being admitted, and that would receive an A as in the most generous, and we would then reassess all of the other products and definitions in relation to that new policy wording. Some provisions receive a yes or no rating. So these are provisions that are difficult to assign or would have no material benefit to providing a rating. It either has it or it doesn't. In other words, if any of the policies have this, they're all exactly the same. There's no point giving it an A, B, or C. It is either there or it isn't. Now, this is quite important because, in my experience, prior to this life as an advisor, we recall a research house that compared two products with the exact same policy wording for a benefit. One received a higher score than the other, and when the researcher was questioned, rather than fixing the methodology, the terminology was changed slightly in how that research house looked at it, and it became very subjective, but obviously from an advisor perspective, it didn't give us great confidence that it was clearly a methodology that we would be comfortable discussing with our clients. We then split all our evaluated provisions into both core and ancillary categories. So a core category is the most common claim experience or a benefit which is most likely to give rise to a claim. Think in terms of trauma, the heart attacks, the cancers, those would be core. And then an ancillary benefit may be something like an income protection or a health benefit that has maybe bed cover or children's trauma. It is a nice to have, and we do need to rate it and compare apples with apples, but it receives a lesser weighting than the core provisions, which are the most important provisions that a client would need to be alluded to in terms of making a purchase of that product. And then we provide overall product scores for both categories. So each of those ratings that we employ will have an underlying score, and those scores are all generated in the background to provide an overall product score. So one of the things that I wanted to touch on is the research depth. So a number of research houses, both here in New Zealand and overseas, employ a very similar methodology to us. They line up products and they give them ratings. What I want to touch on here is just how much we provide inside of Risk Researcher over and above what you'd expect as your static qualitative research. So we provide a product core and ancillary, as I discussed. So here's just an example. Down the left-hand side, you can see the products across the top have a core score and they have a supplementary score. And that is made up of what we deem to be the most important definitions in terms of this product. So here we're looking at agreed value income protection. Clearly the definition of pre-disability earnings and total disability, those are extremely important in this product. But a rehabilitation benefit or retirement protector, they are included but are deemed to be supplementary. So we split that up, and you can see we give a capital letter A, B, or C, and then a lowercase letter for the supplementary cause. You can also see here that if they don't provide it, there's no point rating it. We clearly tell you that it is not in that product.
Quick question, Andrew. How do you define what is deemed, or who makes the determination as to what's a core product versus what's an ancillary product?
That's part of our methodology. So over the years and on an ongoing basis, we review that. We also are privy to a lot of statistics in the background around both claims submitted, claims accepted, hospitalisation rates, and we look at products in both Australia and New Zealand and say, well, what are the primary features that are giving rise to claims? What are the primary features when we talk to clients that they would expect to see, and when we talk to advisors, obviously? And we make a determination on that around core and supplementary. Now that is a fluid discussion. It's not unusual if there's a huge spike in a new benefit. We would absolutely look at that and say, well, we believe this is now becoming more core than it used to, and we'd simply move that up in our methodology.
Right, thank you. So there is some fluidity there. It's not fixed, but it is relatively over short periods it's relatively fixed, but over time it can vary according to the statistical information you're taking on board.
Absolutely, and what I'll touch on as well in this presentation is what we call weighting profiles, and I'll touch on it at a very high level, but it actually allows for an overlay to be provided into the research where advisors themselves can give higher scoring methodologies to certain benefits. And this is where the client centricity comes into it, because you might say, well, I'm going to talk to a young guy about trauma, and he is a triathlete. He's 22, and whilst Risk Researcher or any of the other research houses say that these products stack up and the most important thing is cancer or heart attacks, I actually want to give cancer a higher rating than I do for heart attacks, and it'll probably make more sense when I show you the overlays. But what that does is, without changing the underlying results of the research, which are immutable, obviously, you can tailor the research to an individual client, and what that'll do is it'll return results that are more pertinent to that client based on your weighting profile. I'll touch on that before we end off today. So if I go back to this previous screen, there's a lot happening here as an advisor. You've come in, you've got a whole lot of definitions down the side. Now, for income protection and trauma, there's a lot of very fancy words, and whilst experienced advisors know what each and all of them mean, often you'll come across a word where a client will say, well, hang on, what is angioplasty? And it's quite difficult to just rattle off the top of your head absolutely every definition and what it means. So we provide you with this individual criteria descriptor. So here is an example where we've got angioplasty in a trauma product. I'm doing some research and I'm looking at all these numbers and I'm trying to determine the best product for my client, and I'm not quite sure what that benefit means, but I can see potentially over here that the policy he's on is not rated as highly as a policy that I could potentially get him. So all you do is you click on that word in Xplan or Risk Researcher, and it will open up a layman's term description of what it actually is. So here we can see that a coronary angioplasty is a non-surgical procedure that relieves narrowing and obstruction of the arteries, etc., etc. And we provide that all the way along against anything that we display. So if you want to explain to your client what a coma actually means, you can just click on it and you will get this nice individual descriptor of that benefit. We also provide rating benchmarks. Now, this is absolutely critical in terms of our ISO rating. We can't simply give you the results. We need to explain to you and our external auditors how we got those results, because this is part of our design philosophy, which is people should be able to debate it with us. And we do get insurance companies ringing us to debate, and that's what we encourage. So right here, if I go back to angioplasty, well, what gives a policy an A? What gives it a C, and what gives it a B? So I can actually understand that what I'm looking at in my research, understand how the researchers came to give them that rating. And then probably most important, we're the only ones that then give you our research notes with the actual policy extract. So the whole idea of risk research, again coming back to our first design philosophy, is not to make decisions for you. I see research simply as a central repository of all the information you need to have as an advisor. I do not expect my broker to go and read my policy document and read all the others that he could potentially get for me and come back and have a discussion. I expect that he has the tools to go and do that very quickly, and this is what this provides. So what do we mean by research notes? We'll come back to the screen again. I'm looking at some stuff. I now understand what angioplasty is. I understand how they score it. But down the bottom here, geographic limits, I'm a bit concerned that AMP has a C for that. I don't really know what that means. When I click on the letter, actually click on the C, it pops up our research notes, and it tells you again in plain English the strengths and weaknesses of that defined benefit. So here we can see that the policy does provide 24-hour worldwide cover, but where the insured is totally disabled for 3 months or more whilst residing outside of Australia or New Zealand, the insurer, at their own discretion, could discontinue payments or decide whether they want to continue payments until they return to New Zealand. Now, that is critical for me if I'm talking to an executive who travels a lot for work. what if he has a disability in China and he can't make it back for 4, 5, 6 months? Are you telling me that I cannot provide certainty that this insurer will continue to pay the claim? That is now something that I need to talk to my client about. After reading those notes, I can then look at the policy extract, and this is verbatim from every policy and every benefit that we research provided for you, so that you can print that off if you want to discuss it further, or you can actually look into really for yourself, be comfortable that our research is interpreting that benefit correctly. The other thing, and probably the most important as well, and when I go through the live example, I'll show you just why this is so important, is we also include expired products. So initially when we say that, people think, oh, expired products, you mean old insurance stuff. What we have in again, our design philosophy is if an insurance company today releases a new benefit into their insurance product and does not retrospectively apply that benefit to all existing policyholders, we will expire that product. Because what that means is that whilst client A, who took it last week, and client B, who takes it tomorrow, actually have the same company, the same trauma product, they have different benefits. This new benefit only applies to client B, not client A. So what we do is we expire that product, we stick it into our expired products list, and any new advice going forward will include the new provision. But it's critical when you have a client that comes to see you that has an existing policy, the question is, when was it purchased and has that policy been expired? Because the biggest risk I see is if you just take it at face value and say, you have a Cigna life insurance policy, therefore I'm going to look at Cigna Life and any of the research houses and compare that against potentially Sovereign or Astron, you may be looking at the wrong research, because the Cigna plan that they bought in 2009 was actually expired in 2010 because benefits changed. And again, I'll touch on that as we go through the live demo. So on top of research, obviously we've got qualitative research that we've spoken about, and the quantitative, which is all the quoting. There are some other tools as well that over the years advisors have asked for, and then we've put into the system, and I'll touch on some of those very quickly. One is the ability to rate my insurer. So again, part of our design philosophy is we don't control your experience with your insurers. So what we encourage is after each engagement, if you've had a claim or you've had a new application, go in and rate your insurance companies. And what this will do is it'll provide you with a holistic view long term of which companies are actually giving you the best service, both on the claims process side and maybe the new business or underwriting side. We have a life risk calculator. So very often you get clients saying, yeah, that's cool, but what are the odds? And we always pull out the old insurer PDFs that says, well, 1 in 3 people are going to have a heart attack. Yep, that's 1 in 3 across the entire spectrum. I'm 42. What does that mean for me? So what this life risk calculator is, it's actually a built-in calculator at the back that is that'll include your life expectancy based on the client's age and gender and what products you're looking to cover them with. We don't take these statistics on claims because claims is a flawed sample. What it does is it just tells you about the insured people in New Zealand, so those who had an active product, they had a medical issue, they put in a claim, and that claim was assessed by an insurance company. What about the millions of people who don't have insurance or active insurance and still have a medical issue? So what we're looking for here is a true life risk. So we've actually taken a bunch of statistics, including hospitalization rates, and all sorts of medical data to try and get a better picture of how many people are getting prostate cancers and what is the probability of you getting one if you were, say, 30, 40, or 55. And this is dynamic and changes as you go through.
Is there any geographic analysis on that one, Andrew?
This is New Zealand wide, so we don't split it up across regions, but obviously the Australian statistics drive their calculator, and each of the locales we drive a different calculator. But no, we don't say that if you live in Auckland you're probably going to get more stressed, and that's certainly something we could look at.
Sorry, I thought these stats would have been global, but these are specific to New Zealand advisors. So
Absolutely, yeah.
Population, beg your pardon. Yeah, cool.
Yes, yeah, these are New Zealand stats.
Cool.
The other tool, and this was probably driven by the GFC a few years ago, we had a bunch of advisors coming to us saying, I've got clients ringing me every day saying, times are tough, I'm currently paying $160 for my life insurance, I've done a budget, I can only afford $100. And what these advisors were having to do is to run through all these quote tools and rekey data to try and get as close to that figure as they could. What we did was we reverse engineered our calculator, our quoting tool, and we allow you here to come in and put the client's occupation, age, smoking status, etc., all the things you need for a quote, and then how do they want to pay and what covers do they want. So here I've put, he only wants to spend $100, but he wants life cover and he wants accelerated trauma. So I can put a percentage here to say, for $100, how much life cover can I get with a third of that life cover being trauma? Hit the button and we reverse engineer the quotes. So now you're not getting a quote because we know it's $100. What you're getting is life cover, both level and stepped. And we can display that in a table format as well. So this is a great tool for those that want to do some budgeting and say, you know, well, I'm presented with a defined figure, a premium figure for them to work with. They can use this cover availability tool as well. In the income protection space, we've got a weighting benefit matrix. So again, you might want to print this out for a discussion with a client to say, well, I've recommended $5,000 a month as a stepped indemnity cover. By insurer, you can then say, well, if we extend the wait period, this is what it'll do to your premium. So to age 65, 4 weeks is $109 a month for you. You know, if you prepared and can get yourself through the first 52 weeks, we can halve that premium. So again, print that off, and that's a nice little discussion topic for you to have. One of probably the most exciting things that I've seen in this tool for a while is really a product, or I guess an idea that came out of South Africa. The equivalent of the FMA in South Africa was saying that we are not too concerned with risk ratings. So we don't expect an advisor to go and really get too hung up on product A is a 92% and product B is a 93%. Why did you sell product A? What they want to know is, if I am giving you advice and essentially when I'm moving you from one product to another, what features did you have that you are not going to have now? What is gained and what is lost? And that's quite difficult to ascertain just using risk research. So we came up with a compare features, differences, and ratings idea. And not only that, but you can actually pick specific ones. So again, coming back to the client centricity, as you move through the advice process, your client might say to you, hey, don't give me any product that doesn't cover accidental HIV because I'm a doctor and I'm working in triage and there's lots of blood and guts and that's important to me. So by ticking that, you can then either only view the products that included, or you can see, rather than research and who's better and who's got high ratings, you're simply seeing who offers these benefits and who doesn't. And when I go through the live example, I'll show you just how important that is, especially with replacement of advice. Okay, before I go into the live demo, are there any questions that have come through for you, David, or anything you want me to spend a bit more time on?
Now, there was one other question from Jody, Andrew. That was, we talked about the stats being based upon the New Zealand population. Where is the origin of the stats that you're using?
Okay, so that's a very good question. It's a bit of a black box for us, and the reason behind that is there's some essential IP that we're trying to protect. We take it from 5 or 6 different areas, one of which is Statistics New Zealand. Everything we can get from them we do. We have a medical database of admissions, so we look at admissions across all of the hospitals in New Zealand and what those admissions were for. And there's a few others that it's not that I can't disclose them, but my research team don't actually disclose them to me. So all I can really do to answer that question is say we look at a bunch of areas and then we use our own intellectual property to design a calculator that gives us something that we believe is quite reflective of the probability of cancer admissions.
Right. Hopefully, Jody, that gives you some comfort that it's relatively sound data. Thank you, Andrew.
Okay, so what I'm going to do now is I've just jumped into an Xplan site. A question that Barry wanted me to cover off is, what about those people out there who are really keen to get their hands on Risk Researcher but potentially don't use Xplan or aren't looking at a new software tool for their business? You can access Risk Researcher on its own. Essentially what happens then is you'll get access to a site similar to this, but you won't have all of the CRM type functionality. You'll have a menu that gives you the risk researcher tools. So these are all the tools that we provide in the risk researcher module, many of which I've already covered off. So if I click on that now, I'm independent of a client. So I'm not in a CRM. I'll have to come in here and actually put a client name because I'm going to print whatever off. And again, you just put things like occupation, and that works across. Oops, that's probably why I didn't find it. There we go. So you type it in there, and it's got an active lookup to find the correct and corresponding occupation. So you can absolutely come in here and do your quotes across all of these products. Let's just do a quick life product to show you how that works. Put your number in and generate your quote. Now the quote is generated across your own approved product list, so you can filter by which companies you deal with, which companies you want to see, which companies you don't, etc., etc. The risk tools that I spoke about, the life risk calculator, I'll give you an example of what I meant by it being dynamic, is typically when you speak to someone and you say, you know, what's the life expectancy of a male in New Zealand, they throw out 78.3 or whatever it is. Well, that's true for a person that's born right now. Obviously, as you get older, you've beaten a few odds already. So the life expectancy over here changes. So if I talk about someone who's 46, their life expectancy's already gone up by a year. But if my client is getting into their 60s, you know, it increases substantially, and especially across both genders, that has very different outputs. So there you can see the life expectancy for a 61-year-old female now is actually 86. What you see happening on the right-hand side is a whole bunch of things are changing. So the lifetime risk of acquiring a cancer before 75, they're the risks. Here are the survival durations. So this is fairly important for you, because if you're talking to a female client about lung cancer, well, the probability of surviving a year is actually more than 1 in 2. 5 years or greater, it reduces, but there's still a high probability. So, you know, the chances are you are going to survive this. We need to think through what the financial impacts are going to be. So this tool's really been designed as a discussion point. This little chart down the bottom is a great one when people say, well, you know, if we have a look at a young male, they all say, well, it'll be covered by ACC. Well, actually for you, there's a 37% probability that it'll be an accident, but sickness is 63% and ACC won't come to the party. So a cool little calculator for you to provide to your clients. You can run the report at the top, and you can include that in your statements of advice as you go. There it is down the bottom. You can open that up in a nice little report and attach that to an SOA. Cover availability, we've covered that. We've covered the benefit matrices. We have an agreed versus indemnity calculator, which really compares the two choices for your clients in terms of income protection. We have option availability. So we can have a look across a bunch of products and benefits and say, does this company provide this product? The other thing that's fairly important is medical underwriting limits. So here what you can do is you can say, well, you know, I've got these two products, they stack up pretty much exactly the same, pricing's immaterial, and your client says, well, what kind of medicals am I going to have to do? Well, you need to answer that based on the product that you select. So here you can actually say, well, for life trauma TPD, if you are 54 and you want just 100 grand, firstly, let's see which packages are eligible, and let's have a look at a grid which tells me what we'll need to do, and that will bring in the medical limits based on the cover that you are applying for. So I'll just click that again. Oh, there we go. Okay, so that gives you a better example of you know, some of the differences across the different companies based on their requirements. And again, you can run that report for yourself. The qualitative analysis, the risk researcher stuff, independent of a client, if you want to come in here and compare ratings or differences, you can. You can look at policy extracts as well. So if a client says to you, I've got this policy, I'm not quite sure about something, you can simply come in and say, well, who's the insurer? You'd say it's Guardian Life because it's an old policy. There's the old expired plan, and you want to come in and actually have a look to see what benefits it offers, and you can drill down into all the features and benefits that you require or want to have a look at. Knowledge base, very quickly before I get into, I guess, a client and show you how it is used to generate advice. Risk Researcher provides a Risk Researcher central knowledge base. This is updated every day or when we get updates for you. And basically, this tells you the latest research updates. So Sovereign released their latest product update on July the 6th, and it talks about that. We go across all of the insurers and any changes or updates that we need to notify you about. Any revision to our rating methodology, and we put a spotlight on certain products or benefits. So here we have severity-based insurance, and it's a little place for you to actually understand exactly what that means, both in your practice and how we would research that. All of this information is actually beamed across in our news channel as well. So for those of you that do use Xplan CRM, our news channel beams us through to your mobile phone or wherever you want to subscribe, so you can click on that and actually get kept up to date as well. The Risk Continuum, this will give you a running commentary of all the changes by date. And then you can click on those and you'll get more information about what the update was. And the financial strengths ratings. So here we tell you basically what the rating is for the company and who provided it. You also get a number of settings, and one of those is the weighting profiles that David and I discussed very quickly earlier. So this allows you to come in and actually put an advisor overlay in terms of what is important, essential for a client engagement. So by default it's set to neutral, but I'm going to take a very simple one and say, well, I'm going to take standalone trauma, and for this client I deem, so you can see down the right hand side, you've got your points, your generic 30 points, A, B or C, A being 30, B being 20, C being 10. But you might come in and say, you know what, whilst this is a core provision, I don't think it's important. So when you do that, it takes the weighting away from the underlying algorithm that calculates the result. You might say, this cancer female organs is not only important, my client is saying it is absolutely critical. Do not show me any policies that don't have an A provision from the Risk Researcher. Not only that, but I don't think it's only 30 points. I think it's worth 120 points. So what you can see here is not only do we provide the research, which cannot change, you can put an overlay in terms of importance and become extremely client-centric in your results. Validation settings, what I'll do very quickly is, in Australia, every insurance company has an online quote tool or online application portal. Xplan integrates directly through to them so you can validate your quote. I'll show you how we do that in New Zealand with Fidelity, who are the first out of the blocks. But basically what you need to do is come in here and set yourself up with your Fidelity Apollo login, either username or password. And what that'll do is it'll actually create your clients on the fly in the Apollo system at Fidelity. And as I say, I'll touch on that before I leave. Product list. There are a huge amount of insurance companies that we research. You may well come in here and set up a bunch of approved product lists that you want to toggle between, but you can also say, you know what, I never sell AA Life, so get rid of that. And potentially within one insurer's product range, you may only cover some of their products you don't sell, say their essentials income protection. Other advisor defaults, basically there's a lot you can do. I won't spend too much time on that because it's deviating from the core message around research, but things around modeling selections and printing and product selections, you can come in and really tailor the system to suit you and your business. What I spoke about earlier, my passion is obviously using these tools in the advice process, not coming here and simply printing out a qualitative analysis. So the example being, if I say who's got the best trauma product in New Zealand, well, this means absolutely nothing to me, and a lot of advisors would print this off and put it in their briefcase and use it in most of their meetings, but I might have a meeting this morning with a 22-year-old female and this afternoon with a 55-year-old overweight executive. There's no point taking the same printout saying Astron's trauma product would suit them both, because clearly it won't. I want to be client-centric in my advice. So in the advice process, you can embed all of those tools, the Risk Researcher process, into your advice or report writers. So this is just an example, but I have a personal insurance report writer, and I'll just call this NZFAA. Basically, it allows you to embed your process around the 3 key risk researcher screens. Now, this is available through Keeper in Profile, and as I say, this is just an example on one of my sites. So we go through from goals and objectives, and then we get into the risk researcher screens. So how am I going to use this, or the insurance tool, the risk researcher tool, in a client-centric way? Well, first and foremost, I've done a quick needs analysis. This guy just wants to cover all of his debt, and if I want to see what the debt is, I can click on that, and it tells me he's got a long-term primary mortgage with ANZ Bank, $500,000, and he wants to cover it for life, TPD, and trauma. That's great. What that then does is it calculates a surplus shortfall at the bottom. I am seeing here that there's a shortfall, and I come back to my page, and now I'm seeing an issue because it's only now telling me he's got a TPD shortfall. Well, the reason being is you've also told the system he has a Cigna plan. So under Section 10A of the FAA, you now need to make a decision about advice. Are you giving advice on this product or aren't you? And if you are, you need to be very careful about if you're making an informed opinion about whether to dispose or refrain from disposing of this product. And I don't believe I can do that quickly as an advisor because I don't have the guy's policy document in front of me. Cigna Life, I know very little about. I don't sell their products. So the decision here is to simply exclude it, which you can do. And if you exclude that, you need to come in here and explain why. And what that'll do is it'll say, okay, we now know that he's got a Cigna plan, but you're not giving advice on it. You've explained why you're not, and therefore he now has a shortfall of $500,000. There are those who believe, and I would sit in this camp, that as an advisor, I don't want all of this business to walk out of the door because you're my client and the Cigna plan might not be the best thing for you. I don't want to ignore that. I want to actually review this for you. We've introduced this review feature into Risk Researcher and Xplan. You click that, and what it'll do is it'll then say, okay, what Cigna plan is this? Because remember, as I filled out my fact find, I just wrote the word Cigna. The software doesn't know what that means. But what it has done is it's picked up that Cigna is an insurer covered by Risk Researcher, and it's given me the option to select from their current product range, their Life 1 range, or their expired product range. Now, I know that this guy took this plan in 2006, and I know that it was this product here. So by linking that, it's now got a little tick, and what it's also done down the bottom is it's automatically put that as a cover selection. So all I need to do now is let's go and have a look. And what Xplan's done is it's quoted the market. It has also pulled through the Cigna plan and highlighted it for me as a product for review. So now I'm looking at the results that I need, but coming back to my earlier discussion about getting hung up on ratings, well, I can absolutely go and look at the ratings. Against my approved product range, I can see that there are serious concerns with the Cigna plan. Anything here, angioplasty, click on it, there's a description. Why do they get a C for limitations? No cover is provided for trauma events resulting from the use of alcohol or prescription drugs. So all the information that I need about that Cigna plan is contained within this page. I can now start narrowing things down and saying, okay, well, I'm quite keen on Fidelity and Partners, so let's just filter all the others out. So I can spend some time looking at these plans, and clearly based on that price and what I'm seeing on the screen, this has started to give rise to advice that may lead towards a replacement. But before I do that, as I said earlier, I need to be careful about any features that he may currently have that he will lose based on my advice. And if there are any, I just want to have that informed discussion with my client. They may not be material, but I do need to have that discussion. So straight away I can see that he's going to gain a better exclusion on the trauma policy or exclusion wordings. Indexation is going to be better. He doesn't have the current male cancer in terms of the melanoma, sorry, not male, the melanoma. He's not going to get that with Fidelity either, but he will get that provision with Partners. Okay, I'll bear that in mind. Are there anything else, things that jump out at me? Well, remember that I said this guy was a doctor. Accidental HIV was critical to him. Well, this has made my decision for me because the Fidelity plan includes that. He currently doesn't have it. I'm going to tell him about it. And the other plan that I was looking at doesn't have it either. So now I can make an informed decision about replacing that plan. I can run that report. It'll print off down the bottom for me. But I believe now I'm in a better position to say, Mr. Client, you need to cancel that and come elsewhere. There's a lot I can do here. I can go back and actually add to the cover. So I can say, well, not only do we want to replace the 500, but we want to give you $300,000 extra because of child's tuition or whatever it may be. Whilst I'm on this page, I do want to just touch on a few very important issues. One is loadings. You can put height and weight and BMI to put an overlay over your quotes. Down the bottom, you've got these options as well. We are the only company that has the concept of dynamic scoring. What that means is, with some provisions, some companies have it as an optional add-on. In other words, it costs you more. Others have it built into the product. So for us to have a true comparison of apples versus apples, we need to take that into account. So what we do is we actually expose here who has that product. So life cover, buyback for trauma, all of these other companies will charge you more. AIA's personal cover, it's built in. So what that means is, depending on your selection, we will actually tweak the quote to reflect the actual quote and research that you've asked for, not just what is stuck in Risk Researcher. Right, so we go save and we're back to our page here. We now want to make a selection. Now, I spoke about quote validation. You can see across these premiums down the bottom, there's this little button here against Fidelity. These premiums are all generated by IRESS based on the tables and all of the factors given to us by each of these insurance companies. But ultimately, to apply for a product, you end up having to rekey information into the insurance company's quote tool. Some of them are still on desktop sending out discs, but some are integrated into the web. Fidelity is one of those. So Risk Researcher says this is going to be $111.05. Well, let's see. I click that button, and what's happening now is all of the data that I've entered in my advice process is being bundled up. It's logging into Fidelity's Apollo system. It's creating a client called Brad Pitt. It's completing a quote, and it is going to return to me a true Fidelity quote. Fidelity round up the tenth of a cent. But if I push print, that will actually show me the Fidelity quote for Brad Pitt. Split premiums, policy fee. This is now ready for underwriting. I do not need to rekey any information because this is the actual Fidelity quote generated by their system. So the next stage of that is we will then integrate that directly through to their application portal as well to minimize rekeying of information for you guys. So I've done the quote, I've done my research, I've done everything I need to do. One last thing, sorry, is you can view premium projections both as a table and as a chart. So you can see both first year, and you can also view quadrant. Now what the quadrant does is it puts the price and the quality in a table for you. So the higher the score and the lower the premium, this is the area that you want to be looking at. This, his current Cigna plan, tells us that it's a higher premium and a lower quality provision. There it is, $165, and he gets a 41 from the ratings. So I've done all my homework. I can make an informed decision about the Cigna plan. I now go next, and all of that information is now contained in my policy recommendations page. There's a couple of things I need to do here. By default, this is still saying hold. I've just explained, I've done my homework, so I'm going to replace that. That automatically then changes my summary, but piece de resistance, in my opinion, is we've got this replacement of advice functionality built in. I may have a number of products, so in this case, there's only one. It's quite simple. I tick it. Now I've told the system what we're replacing it with, and it's automatically told me what the difference is in prices. But I can come in here and either use default text, if I don't like typing, or I can come in and type, or if you like me, I tend to use something like this, which as I talk, it types for me. Nice and quick, because I'm a lazy person, so I do a lot of typing, and if I was going to do a statement of advice, I would carry on using that. This tab is my favorite. This automatically tells me the benefits that will be gained or lost. And all I do is I tick at the top, and I tick at the bottom to disclose that. Any other consequences of replacement, I can type away. So I've actually now done my replacement, and this is not just to satisfy the FMA, this is to tell my client in my statement of advice why I'm doing what I'm doing. The last thing I need to do, obviously, is explain why I've picked Fidelity. So why is the product suitable? Again, I can come in and say, this product meets your requirements of protecting your family in the event of your death. I can say why I picked the insurer. I've picked Fidelity Life because Fidelity Life is whatever. So I have all my defaults for all my insurance companies. All of these tabs are integrated into the product. Why did you pick life cover? Did you accelerate this or put it standalone? I accelerated it. The reasons for that are bang. So if I picked income protection or health, these tabs would all be related to the product. Now this is where you earn your money, but for the sake of time, I have done that very quickly. I go next, my cover letter on the end, and I push print. And that will generate my statement of advice, and in my opinion has met all of my benchmarks. Barry can comment on it after this, but I have pulled in your existing policy even though it's not on my approved product list. I've done some homework on the provisions that it has. You're not going to lose anything by moving over to Fidelity, but you are going to gain a number of new features. I've looked at the quality of the provisions. They're fairly weak in terms of the policy that I'm recommending. I've supported my recommendations in terms of my replacement of advice. I've also supported them in terms of why I picked Fidelity and why I structured the product that I recommended. So all of that will be generated, and as an example, whether it's on Profile or any other X-Plan offer, that would open up a statement of advice that would bring all of that through in terms of your goals, your scope, your exposure based on the needs analysis that I did. My recommendation is Fidelity, 800,000, 111.5. Why I picked them? I recommend you replace the following Cigna plan. It's costing you that. Reasons for replacement, differences in benefits. You're going to gain all of these cool things. You will lose nothing. And that is an example of a very simple statement of advice. So that is Risk Researcher as a standalone tool, as well as incorporating it into your advice process to streamline what you guys do on the road. And that's probably it for me, unless there's questions, and Barry's probably champing at the bit to have a crack.
Yeah, yes, but, Andrew, I'm sorry, I don't think an hour was enough time to go through the amount of material you have to cover. That was a very whistle-stop tour of Risk Research, and to be honest, I hadn't quite appreciated the depth of information that's available to advisors through that tool. So thank you, and apologies that we had to sort of accelerate it a little bit. I think we could have probably done at least a couple of hours, and still probably not have done it justice. We've sort of covered off most of the questions as we've gone on. So and in the interest of time, what we'll do is I'll hand over to Barry to really sort of sum up on the use of Risk Researcher in the advice process, and potentially some of the areas where advisors need to give some thought to supplementing the information that comes out. So Andrew, thank you. I will leave you on with Mike in case Barry has some questions specifically to
Sure.
to ask you, and I'm just trying to unmute Barry, and he's not allowing me to unmute for some reason. I'm going to unmute Barry. No, I'm going to make Barry the presenter. Let's try that. See if that works. For some reason, Barry, I can't unmute you. Barry, I wonder if you muted yourself.
Yeah, Barry's muted himself, I think, which is not like Barry at all.
No, but it does seem to be that it's showing red on mine. I managed to unmute other people, but I can't unmute Barry for some reason. Barry, could I ask you to do me a favour? Could you just log out and log back in again and see if that's the issue? I'm assuming you can hear me. While we're waiting for Barry to come back on, I think just try one more time. No, he's shown as being shown as presenter, but for some reason he's not unmuting. Um, just a quick couple of questions from the information you presented already, Andrew. The first one is on business risk. I noticed there was a few business risk covers. How extensive is the business risk? Um, the analysis on the business risk covers versus the personal covers. Is it relatively comprehensive?
Yeah, absolutely. So there's two streams there. We within the risk researcher module, we obviously cover the products from a qualitative and quantitative analysis. That includes all the key person type covers. The only one that we don't research is one part's business extra at this stage because it doesn't really have anything to compare to. It's so unique. But the other stream that we do have is actually a business insurance report writer, which is a full business analysis tool that allows a statement of advice to come out around key person, buy, sell, etc., and that's embedded with that research as well. So probably two schools of thought from a business perspective.
Cool. Thank you. Okay, I think Barry's now joined us. I don't know.
Yeah, sorry about that. My power plug wasn't plugged in, so my computer died on me. Anyway, I'm here.
Welcome, Barry.
Thank
Hopefully
you.
you got most of what Andrew was saying. I'm very conscious of
No,
time,
I did.
so I'll give
Yep.
you. Let's have sort of allow 10 minutes of overview
Oh,
from.
thanks.
I'd like to allow more, but I get complaints.
Yeah, no, good as gold. Yeah, sorry, I thought we had until 15:15, but okay. So in the next couple of
Oh,
minutes.
let's go to 15:15 then. That's fine. I'm sure people will, if they've got other things to do, they'll disappear after
Yeah,
those mentioned.
look, I think we've covered why it's important. Let me just, I've just made some notes as I've gone along. Andrew, thanks very much for the presentation and for hitting some of the key points. So risk researcher, if we're to look at that as we've been comparing it to the other risk research houses and things around New Zealand, what are some of the pros and cons? Some of the ones I picked up on that I think are really important and that would help cover off or make it easy for advisors during their advice process. The first one I note is the expired product information. One of the biggest areas or gaps we see when reviewing advice processes is the fact that people will say, oh, the rating for a product is such and such because you said they've got a sovereign policy. And of course the question is, well, which sovereign policy do they have, and how do you're using a current rating versus a rating from a product that came out in 2004. So I think that's an absolutely excellent piece of tool. The other bit too is having the fact that the independence of the research. The researchers are independent within the organisation with the IRESS, so that they work in their own, but also having those ISO ratings to make sure that you can have confidence in the research. Now, for you AFAs out there, that's one of the things that you do need to meet. I think it's Code Standard 6. If you're going to rely on particular research, you need to understand it. In today's session, I hope would have given a lot more people an insight who have been using this research. I thought Andrew's point was very good. I do see a lot of statements of advice or files where somebody has gone and done some quotes or put in some product and some's insured for a client into Risk Researcher. It's popped up the core and ancillary score page. They've printed that out and they've added it in as, say, here's your research. You can see Astron's rated A. That's fantastic. In fact, in some cases, I've seen advisors state that they use IRESS research or Risk Researcher, and I say, oh, cool, so you subscribe to that? And they go, oh, no, I don't. And I say, oh, okay, so where did you get the research from? They go, oh, I got it from the BDM. Oh, was that the BDM of the company that you've just recommended? And I sort of go, you're really, really missing the point. And I'd say to anyone that's been seeing today's presentation who has access either currently to Xplan, Client Focus, or is looking for a tool, you can see that there's so much more depth and very easily you can cover off, how to do that. Another area I really like, and one that Andrew covered off early, was the fact that yes, we score the product and we give it a score, but you as advisors are the only ones who are able to determine suitability for a client. And I thought there was an excellent example of that with the doctor requiring accidental HIV. And it actually came up that we said, well, here's your Cigna product, here's the Partners one, they don't have it. The Fidelity one does. It's a little bit more expensive than Partners, and in fact, I think the score was a little less overall. So someone else might go, oh, I can give you a better deal because the Partners one's actually cheaper and better rated, but it would be wrong for that particular client, and that would be a mistake a lot of people could make. And then when it comes to the rationale for replacement, why did you pick Fidelity? It had nothing to do with Fidelity's lovely logo, their score, or anything like that. It had to do with that one particular feature and the fact that the rest of the product was suitable. Being able to rate the insurers is important. Having those, being able to score them. We do a lot of work with advisors and advisor groups rating insurers for preferred provider processes and things like that. To then be able to enter those ratings into your own system and have it come up provides excellent tool. So yeah, there was a lot of good, really good things in there. And that life risk calculator, once again, that's a pretty unique tool in New Zealand. So some great features. Cons, there's still a bit of work to do. To be client-centric, some of the other researchers will automatically help with selection of client-centric things around whether it's good for males and females and things, whereas you need to do a little bit more work in this. But in saying that, if you're prepared to do that work and get it right, it's probably a more comprehensive tool in that client-centric basis. The key thing here, though, is the scores. They don't tell you the whole score. But yeah, as I say, if you've got access to Xplan, or and as I was really pleased Andrew was able to confirm, you can access this tool without having to have the other modules. But as you can see how easily Andrew integrated it into a statement of advice, you may want to look at those other modules. Right. Key things for you to think about if you were going to use this tool. As I said, I've said previously, what do you do? Do you select product or provider first? Big question is, what do you say you do? Hopefully you've reviewed that from last time. Or what is applied in your current documentation? What that means is if a client does have a Cigna product, like in Andrew's example, and you're saying, well, let's review that, well, are you reviewing that? So here's, I guess, the key options for using Risk Researcher. The example Andrew gave using the statement of advice was that one-by-one example. The other option is saying, well, I'm going to select the preferred product list, which I thought was quite good, and that would change the way you communicate that. Preferred providers, so if you were selecting preferred providers, and we do see some of those core and ancillary scores with providers used to say, well, I've selected my preferred provider. Now, the thing is, the example we gave with the accidental HIV, there's a classic example where your preferred provider might have been Cigna, for example, and someone had a Fidelity product and you said, well, actually my preferred provider is Cigna. Man, you can see how that could cause a whole lot of issues if you don't stop and still do the individual comparisons, which this tool allows you to do. And replacement business, it's the biggest #1 risk to risk advisors, as we've said in the past. So I guess last time we looked at the preferred provider selection, thinking about what Andrew's shown us on this, how would you integrate this if you're going to do it one by one? I guess the first thing you need to think about is how would you communicate to client, which providers do you use? We always suggest having an about us or terms of engagement, and obviously some people do that on the website. And that's really important because then you need to discuss, well, what limitations? Am I going to give advice on replacement of a Cigna policy or am I not? You can see here that you might have 5 agencies with companies, but all of a sudden you've got the market at your fingertips and all the expired products, which means you don't have to have product accreditation in each and every single product provider in New Zealand if you've got external research that you can rely upon to get you that information. The next part is how do you have that knowledge? And as I say, you've got to be able to prove that. There are, I had some examples last week of cases where people were just walking in and saying, oh, you've got this bank product. Well, that's okay. They're not normally rated very good, so we'll roll that over to this other company. And I said, well, what research did you do? And they said, oh, we just asked the client what cover they had and where they had it. No research, no evidence, and funnily enough, they didn't get advice process approval from us. Luckily, not an NZFAA member either, so there you go.
I'm pleased to hear that.
Yeah. Now, and then there's about the communication of this to your clients. Excuse me. Depending upon how you've set up your engagement at the start and what you've said you do, will then determine how much of this you have to show clients. In the event of replacement business, that side-by-side comparison of what you're gaining and what you're losing, I think, is vital. And in fact, the FMA and their care diligence and skill part for an insurance replacement have actually stated that's what they'd expect to see. Those are the documents and the areas that you would have to look at once you've decided upon which of the ways you are going to select product and how you're going to integrate that into your process. When you are doing research, we do recommend an advisor worksheet. You can incorporate that into your fact finder and needs analysis document just to record what you do, which research you did rely upon. I was in one court case where they gave files saying, here's the ratings we used from a rating house, wasn't a risk researcher, and we said, well, hang on, these are the current ones. What about the ones back in 2004? And they said, oh, well, we haven't got those. So how do we know what the ratings were? But yeah, really vital. Hopefully, I think from what Andrew has shown today, there would be a lot of people who have seen risk researcher ratings or used or looked at risk researcher that probably didn't realise the real power behind that and some of the tools that go along with it. It's definitely worth another look if you're already using Xplan or Profile or one of those tools, and I would suggest well worth the cost if you were going to integrate that into your advice process. And I'm not paid for saying that, by the way. That's just my independent development solutions opinion. Thanks, David.
Barry, thank you for a very quick whistle stop overview of the from the compliance point of view, the benefits of risk researcher. Hopefully, today's session has given you some insights into the risk researcher product. It is incredibly broad in terms of its capability, and it's a lot broader, as I say, Andrew, than I had originally thought, and definitely prior to what I thought prior to this session. It is. It has an enormous wealth of information, and I think particularly given the recent focus on replacement business and the current FMA project in that regard, a tool like this can help ensure that if you are giving advice for a client to replace an existing product, this will give you the evidence you need to support that recommendation rather than just relying on your own individual analysis of two different products, which can actually be obviously relatively time consuming. I'm sure you guys will appreciate that. Barry and Andrew, thank you very much for your time this morning. Incredibly valuable from my point of view, hopefully the same for the audience. I'll finish up the session now. If you do want to take advantage of the 1 hour structured CPD, please make sure you complete the follow-up questionnaire to this session. And we will recognise that over the next week or two. I am hoping that today's recording will not screw up as it has done in the past, and I'll be able to make it available online over the next few days. Hopefully you guys have enjoyed or benefited from the session. If you want to know a little bit more about Risk Researcher and you're a member of Keeper, give Arjoy or Mandy or Kerry a call, and they can explain the process of getting hold of Risk Researcher if you don't already use it. Have a great weekend, everybody, and we will talk soon. Thank you.
Cheers, Dave.
Thanks, Barry.
Thanks, guys.